If you scroll through the financial news today, the consensus on British Columbia's real estate market is grim. The Daily Hive recently summarized the local anxiety with a blunt headline: "The vibes are bad." The data justifies the nervousness. Since the start of 2026, provincial sales volume has cratered 60% from the speculative peaks of 2021. The market is currently averaging just 2,000 to 2,200 transactions per month, a decadal low. But this second line, representing benchmark home prices, breaks standard economic assumptions. In a normal cycle, a demand collapse of this scale forces prices down with it. Instead, BC prices have remained stubbornly flat, drifting lower by only single digits. Institutional policy is providing the primary anchor. The Bank of Canada has held its policy interest rate at 2.25%. By maintaining this pause, the central bank has eased the immediate upward rate pressure that typically triggers a wave of forced selling. When sales volume hits the floor while prices refuse to follow, the market enters a systemic freeze. This freeze is maintained by seller reservation prices. Unlike previous historic crashes, BC homeowners are largely owner-occupiers with long-term horizons. They are choosing to wait for better conditions rather than accepting lower bids, effectively removing supply from the market. Owners can wait because of the equity buffer. The rapid appreciation between 2015 and 2022 gave most homeowners a deep financial cushion. Even a 10% market dip leaves very few owners underwater or owing more than their home is worth. Canadian lenders are also actively preventing defaults. By extending amortization periods for those facing the renewal shock, banks are keeping distressed inventory off the multiple listing service. Finally, the OSFI stress test functioned as a regulatory brake. It ensured buyers were qualified at rates close to what they face today, preventing the systemic mortgage failure that often characterizes a total collapse. These four guardrails have replaced a panic-summing crash with a behavioral gridlock, a stare-down between fearful buyers and highly insulated sellers. The market is currently operating as a waiting room. The majority of participants have voluntarily sidelined themselves, waiting for clear signals on the future path of interest rates. They are watching the 2027 renewal cliff. This is the point when a massive wave of mortgages from the 2022 peak will finally mature, forcing owners to reconcile their original low-rate contracts with the new economic reality. Because of this hesitation, currently listed properties are motivated outliers. Inventory is accumulating in the detached segment, where homes sit for months without serious offers. Low transactional volume is not a sign that nobody is buying. It signals a selective phase where quiet, prepared money is hunting for those specific sellers who cannot afford to wait until 2027. Success in a frozen market requires a specific profile. Patient cash buyers are leveraging significant down payments to negotiate aggressive discounts of 10 to 15% off list prices in saturated urban markets. Then there are the downsizing equity migrants. They are cashing out their massive equity from expensive Vancouver cores to buy outright in regional markets like Victoria, where prices have remained stickier or even increased. Contrarian investors are also moving in, acquiring discounted land from over-leveraged developers who are unable to start their projects in this high-rate environment. Savvy buyers are also utilizing the BC home buyer rescission period. This mandatory 3-day cooling-off window allows them to lock in a deal and perform exhaustive due diligence, with the option to rescind for a small 0.25% fee if an inspection reveals a mistake. Succeeding in this environment requires abandoning traditional buy-and-hold strategies in favor of aggressive, contrarian plays that exploit the current stalemate. If you are an active buyer, secure your pre-approvals immediately and lock in 120-day rate holds. Your target should be properties with motivated sellers who are already pricing for the realities of a low-volume market. Sellers must abandon the peak valuations of 2022. Accurate pricing is the only way to attract the small pool of active buyers currently navigating the gridlock. For those currently sidelined, focus on the boring math. Ignore subjective headlines and read the raw data packages from local real estate boards to spot the early signs of stabilization. In a market paralyzed by bad vibes, the most valuable asset is the ability to distinguish between a temporary narrative shock and a permanent structural shift.